Hey, what's up guys, what's going on? Welcome back to my channel. Hope we are good. All right, in this video again I'm going to be sharing another amazing or interesting candlestick pattern right here in this candlestick episode. I hope you have been enjoying the series, and this one is nothing different. In fact, this one is going to be more interesting, and because the candlestick we are about to learn now is the easiest candlestick to identify. So even if you don't know about candlesticks, within 5 minutes, because this video is likely going to be 5 to 8 minutes or more, I don't know, it depends on how fast we'll be able to do this. All right, so but within 10 minutes you are good when it comes to this particular candlestick. So even though if you are hearing about candlestick for the first time, so what is this candlestick? This candlestick is the reversal, is a reversal candlestick anyways. So now you can identify this both in an uptrending market or downtrending market, okay? But it's always good whenever you are trading candlestick, you make sure that you are following the trend, okay? If you are looking for trend continuation candles, okay, or if you want a reversal, that means you are going, for swing trading, okay, making those sniper entry. But now the one we are going to learn, okay, our entry is not likely going to be the sniper entry, guys. Okay, it's likely not going to be the sniper entry. We want to always make the best entry and the safe entry, right? So let's just check out the candlestick. So it's possibly known as Doji, okay, Doji or indecision candlestick pattern. So we have something like this, okay, and something like this. So let me use like the color we are conversant with. Let me use like bearish, okay. So this is actually, this is what I'm talking about, okay. So the next one, let's say bullish, okay. So this candlestick, simply the opening and the closing of this candlestick is almost at the same place. Like they opened and closed at the same place. That means the candlestick opens somewhere here and pushed all the way up to this side, also pushed down to this level, and at the end of the day came back to the place, okay, where it opened and closed there. So the opening and closing of this candle is almost at the same place. So that's why they call this candlestick indecision candlestick, okay, but popularly known as Doji. So if you look this one, just like this one is a bullish Doji, bearish Doji. But now this is not like where we are focusing. We are focusing on how do we make entries with this candlestick, right? How do we make entries? So let me share with you what we are going to be doing, okay. So when you have a Doji, okay, let's say you have this particular one. Let's start with this, okay. So you have this particular Doji right here in your chart. So let's assume that the price have been pushing to the upside, okay, making movement to the up, to the up, to the up, okay. So at this point you have this particular candlestick pattern. Now you are looking at maybe reversal, so that the price kind of turn to the downside, okay, reversal to the downside. Now the common way people trade is once this candlestick closes, you make your entry, okay. Once the candlestick closes, you make your entry, maybe at this, maybe at this zone. You are going to be making your entry at the close of this candle, okay. But that's not what we are going to be doing, guys, okay. So what we are going to be doing is that when this candlestick closes, okay, let me see if I can clean this, okay. When this candlestick closes, we are going to be waiting for something. We are going to be waiting for the next candle, okay, to close below this. That is the low of that Doji before we make entry. Now look at what we are going to see. This is you identifying these candlesticks, this particular candlestick on a higher time frame, that is 4 hours time frame. Then once you identify it, you go down to 30 minutes time frame. Okay, but before then, just mark out the high, okay, the high of this candle, which is here, and the low, which is down here. Okay, this is going to be the low. So once you mark out the high and the low, if you go down to lower time frame, what you are going to have is you are going to have some candlestick, that is movement. Okay, so let's say this is 30 minutes time frame now. Okay, you are going to have some kind of movement from the close. This is the closing, so this same place, that's where you are going to see some movement. Okay, it could be something like this until the price breakout. So once the price breakout from this low, that's where you are going to be making your entry. Okay, on a lower time frame, when the price breakouts here, so most time the price will break and also do the retesting before pushing to the downside. Okay, then if you come to 4 hours, what you are going to see on 4 hours is just a bearish engulfing this way. This is what you are going to have in 4 hours. But in 30 minutes time frame, you are going to have something like this movement on a lower time frame. Okay, and this is where you are going to be making your entry on a lower time frame. Okay, you are to, you know, sell either at the breakout, okay, or if the price gives you a retest, you sell at retest. Okay, but you are not just going to enter here, you are entering at the close of the low of the doji. Okay, this is exactly what we play out on the lower time frame. So let's go to the chart and see exactly what I'm talking about. So let's start with this one, which is the most recent one, so you guys can see this is the doji we are talking about. Okay, so now if look at the doji right here. Okay, that's the candlestick we are talking about on a lower on a higher time frame, which is 4 hours time frame. So now I've seen this on 4 hours time frame. What do I have to do? I will simply go down to lower time frame, okay, to see when the price closed below here, maybe retested, or maybe not, or if the price did not retest, but most time the price will retest. Then something else I forgot is that the movement on a lower time frame is likely going to look like a ranging market, guys. Okay, so you are going to have, let's say this is the candlestick, and this is that's the candlestick. Now on a lower time frame, 30 minutes time frame, all these places you are going to see like the price ranging on a lower time frame. Okay, so when you go to lower time frame, you just simply mark the low and the high and make sure you wait for the price to break. Okay, to break the low, to push down and break here. That's when you are going to be making entry, or better still, when the price retests this, then you sell. That's where you are going to be selling also. That could be your second entry. Okay, but that's basically what you are going to see on a lower time frame, instead of just making entry on a higher time frame like this, which if you do that, you can see that this particular candle pull back to this zone. That's where it will take a lot of people off the market. So you don't want to be in this kind of trade where you make entries here. If you, let's say you follow the normal way and you decided to sell at this point, look at what will happen. You are going to set your stop loss just a little bit above the wick of this candle. That's how it is everywhere. That's how you trade. Most people trade this candlestick. And look at this particular bearish candle. Okay, this is what the candlestick did. Came up with the wick and take you out, right? And take you out of this market before pushing to the downside. You are correct with your speculation, everything is on point, but the manipulation here is going to take you out. And what I'm here to teach you is how to avoid all these things, right? Waiting patiently for a better entry. So if I go down to 15 minutes time frame now for my entry, so look at what will happen on 15 minutes time frame. So you can see our where I drew that rectangle. So this is exactly our zone. Okay, so look at the wick. You can see this wick. This is the wick that was used to push out people. Look at this particular zone is what is used to push out people out of this market. But we are not doing anything. What we are doing is just to extend this line this way. You can see it. You extend it. Remember, when this thing is happening, when this candlestick is forming, this might be where the price is. This is the price. So you just extend this. This is the low. Okay, you can see this is the low of that indecision candle. If I should put a line here, Okay, you can see my line, and we go to the 4 hours time frame again. You're going to see that that is the low. I want you guys to understand this very well. Okay, if I go to 4 hours, can you clearly see that this is the low of that candle? Okay, this is the low of this candle. Let me delete this. So you can see that this is the low of that candle. So the same thing on a lower time frame. That's why I have those my line there. So you mark the low, okay, and the high. This is the low and the high. You can use a horizontal line like this and mark the low and the high. You see what happened? This particular candle closes below, so you can make entry at the close of this one, which is this particular. At the close of this candle you sell, right? Your stop loss could be above here or here, anywhere you want, but if you want to be more like to be safe, you can actually set your stop loss above the high of that candle, right? Then your TP could be anything. Okay, your TP could be anything. So that's the thing. You can go for 1:2, 1:3, 1:4, one is depending on whatever trade your trading plan. Okay, now if you did not make entry here, you can see that the price after closing here retested. That's the second entry. At the retest, you can see price retested this zone. That's the point you are going to make another entry at the retest. Okay, then at this retest, if you are making entry on retest, you must not shift your stop now above here, because the price have retested, giving you another swing high. So you can actually just set your stop loss anywhere around here. Okay, so that's the 2 entries you are going to be having in this particular trade. Okay, so this is just first example, so I'm not going to waste too much time on this video because you have time to go through the video over and over again to understand this. Okay, so now if I go up again to 4 hours time frame, let's get another example quickly on 4 hours time frame. That is another entry. So on 4 hours time frame again, we can just shift to see if we can see another one. Okay, okay, we have one here. You can see this one right here. Okay, we have this one here. We have also here. So let me just get this. We have this. It happens, you can check crash 300. It happens on most time on crash 300. So check out crash 300 on 4 hours time frame. This is this one again, and we also have this. Okay, let's see, we also have this. Okay, we still take this at Doji. So I'm just trying to mark out different places where it is just for you to identification. It's very easy to identify where these things form. Okay, so let's just go to a lower time frame to see what happens at that zone. Okay, then if I go to 15 minutes time frame, okay, you can still use a 30 minutes time frame, anyone. Okay, so we go down to a lower time frame to see how we can make our entry. So now we go to this time frame. You can see exactly this is the low of that candle. This is the low of the candle, and we have the high of the candle. So to confirm this, I'll simply also go back again to 4 hours for you to see that this is the low of the candle we are talking about, so that it will look like you can see clearly. As you can see, this is the high and this is the low, so we are correct, we are good. So we go down to that lower time frame, and what we are waiting for is when the price will break out from this low, okay, and retest the low, or at breakout. 2 things. So now if you look, the first time we are going to be making entry is at this break. So we are making entry at the closing of this candle. You can see that breakout. Okay, that's the point. That's where you are going to make entry, at the closing of this, and your stop loss should be above this swing high right here. Okay, now if you did not make entry at the breakout of that line, you can still see that the next candle also retested. You can still make entry with the retest. The next candle retested you can still make entry with the retest, right? Then let's say you did not make entry these two places, you still have options to make entry at this retest again. So the price still retested after a long period of time, tested the zone. Okay, you can still make entry at this point. Okay, that's when you are not going to be exposing your stop loss, because you have seen a swing high already after the breakout. So you don't need to start setting your stop loss above here anymore. Okay, you can just set it anywhere around here, maybe using this swing low inside here. Okay, or connecting this, that's the high, and make sure your stop loss is maybe a little bit above there. So that's for you to play safe for this. All right, so this is the next entry, guys. Okay, this is the next entry. So that is exactly what you want. That's exactly what you want. Now if I go back again to the ones I've marked out, you can see this one. This is the next one. So look at the thing, it will save you from entering wrong trades. You can see here you expected to sell at the breakout to the downside, but what happened? The price couldn't close below this line. You can see how you avoided all this entry. But if you are just making, look at the second one. I'm talking about the second example. Let me delete this one because we are done with this. Okay, so this kind of trade is what you want to avoid. Okay, now you can see that the price couldn't close below this level, the low of the indecision candle, which is the doji, right? It couldn't close until another one formed, and that's the one we are taking. So we'll be able to filter out this particular one that makes people lose. So if you don't know this by now, you could have been here in a ranging market like this, putting in profit, loss, and at the end of the day hit your stop loss here, right? So look at the next one. This is what we want again. See, you can see the high and the low. So look at where the price breakout. Let me delete this one because we couldn't trade it because it's not the nice one. There's no breakout, or there's no retest, no breakout. Okay, so you can see this one. The breakout happened and you expected to buy at this zone after the breakout. Okay, then if you did not buy at this zone, you have option when the price retested. Okay, because this is the high. Okay, the price later retested to the same zone, which is with this candle to the downside. Then that's the point you are still going to be making your entry. You are still going to be buying at that zone also. Okay, so you still have options to buy at retest or breakout. All right, so we still have this one, another example. I've marked out this on a higher time frame, you guys remember already. So this is the point, you have this extended. So this is the problem people have. Look at where the price will take a lot of people out. If you go to the higher time frame, you are going to see that this zone is the next candle. They always use the next candle, the wick of the next candle, to take people out, because people are just making entry based on, they see the doji, it formed completely, and at the end of the doji closes, they just believe this is a reversal pattern. They simply do what? They simply sell. Let's say that the price trending up, they simply sell, and they set their stop loss at the high of this doji, a little bit above the high of this doji. What the price does is that the next price is going to form, okay, bearish, okay, to the downside. That's the next, it will open to form to the downside, okay. But what will happen is that it will use a small wick, okay, sorry, a long wick, to take people out at this zone. Okay, it will take people out before closing to the downside. Okay, that's what happened most time, and you are seeing it. So this is exactly what you want to avoid. And if you avoid this and follow these particular breakouts and retesting strategy, you are going to be making money and avoiding wrong trades. All right, guys, I hope this is helpful. I hope you enjoyed this. Don't forget to like this video. That's the only thing that will motivate me to do more research, to bring out more premium strategy to you guys. All right, so these are things you pay for. These are things you know that takes a lot of time to develop, to practice, to back test, to trade, to build confidence, to bring it on YouTube here. So for you to support this channel, just like the video, leave a good comment, share. All right, share the videos so that people can actually see this kind of videos, enjoy trading for once. All right, guys, so remember, I have a Telegram channel. If you want to join, it's free. The link will be in the description of this video. If you are new to trading, or you are new to synthetic indices and you want to register an account, there's also a link in the description of this video where you can click and follow the link, follow the process, register. Then if you go to your laptop or you are using your phone to access MT5, you are going to now start seeing, when you log in, you are going to start seeing this boom and crash stuff. You're going to be seeing volatility and all that. So guys, that's that for this video. I hope you enjoyed this, and I will see you guys in the next one. Bye for now, guys.